Hello, ladies and gentlemen, good morning. I'm Joseph Novichkov, Senior Analyst at GDM. With today's outlook, starting first with Bank of Japan's, it caught in a blind. Now, nearly 2 years into its stimulus experiment as it further qualifies its inflation goals in response to tumbling oil prices, a move that could prove self-defeating by tempering price expectations. In April 2013, the Bank of Japan pledged to achieve its 2% inflation target in about 2 years, under Governor Kuruda's monetary easing policy, as campaigned to print money at an unprecedented scale in Japan. After all, 2 years have nearly passed, and core consumer inflation, the BOJ's key price gouge, is only a quarter of the bank's target, and of course is expected to slow further in the upcoming months. The yen in result, of course, is unchanged at this moment at 117.50 versus the US dollar before the bond investment data later into the trading day. Moving swiftly to Australia, over there the Reserve Bank cuts rates on yesterday for the first time since August 2013, as the central bank moved to prop up an economy hit by falling commodity prices. The RBA slashed rates by 25 basis points to a new record low of 2.25%. The news sent Australian dollar skidding to a 6-year low of 0.7650 US dollars. In the New Zealand region, Kiwi swung from 1% losses to a 1.2% gains as Reserve Bank of New Zealand Governor Graham Wheeler called the Kiwi overvalued while signaling a reluctance to join a global wave of easing by cutting the developed world's highest interest rates. The New Zealand dollar strengthened 0.9% to 74.25 US cents this morning. In Europe, we're taking a look at the consumer confidence in UK. It grew 5 times faster than the global rates last year, but despite a wider backdrop of falling prices, shoppers are more reluctant to spend. The UK Consumer Confidence Index hit 94 at the end of 2014, according to the data published then, 10 points higher than at the end of 2013. And of course, the highest level in overnight. The sterling is slightly higher today versus the US dollar at 1.5162 after climbing to the highest in a week yesterday at 1.5199. The euro share currency climbed yesterday to 1.1536 and of course closed higher with 125 pips as Greece's new left-wing government are keeping markets at and of course the Eurozone leaders on their toes, dropping calls for a debt haircut in return to growth-linked bonds, a plan for some analysts that say it could be accepted by the country's international creditors. Let's take a look at the commodity sector. Gold edged higher over there on this morning after falling more than 1% in yesterday's trading session. However, gains were capped as Greece's plan to end a standoff with creditors sharpened appetite for riskier assets. Appetite for risk now appears higher, and it's spurring some rotation of funds away from the safer haven, as in the yen and gold, to riskier assets such as the equities and the euro. Gold was up 0.3% at 1263.95 an ounce this morning, after falling 1.2% yesterday, which of course marks the gold to be 4th drop in 5 trading sessions. All traders and investors are asking themselves right now if oil has finally bottomed. One thing is for sure, oil prices rallied off their post-crisis lows in a move that may mark the bottom of the road, climbing as high as $52.35 a barrel in the Asian session after trading as low as $43.58 last week. This was lowest since mid-2009 during the global financial crisis. Taking a look briefly to the economic calendar's agenda today, we're looking at Draghi and Varoufakis meeting along with Juncker and Tsipras. the same meeting at the same time. And at 10 a.m. European retail sales, at 15 ISM non-manufacturing PMI for US, and 15:30 Energy Information Administration's weekly crude oil stock change report. That's all for today. Keep an eye on the calendar. A lot of important events today. Thank you very much for joining us. Bye-bye.